There's also going to be electricians, and there's going to be electricians union, and there's going to be a lot of projects, and there's probably going to be a bond, and somebody's going to complain about it. We're going to dig a lot of trenches, right? Because where are those power lines running? And someone's probably going to put a drill, jackhammer through one of the power lines, and stuff's going to happen. And then we're going to fight over whether we burn coal or we run the power line to Niagara Falls. And there's going to be stuff, but I just think there's just a lot of work to be done. We're building out the future. Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not?
Hey guys, welcome to Everyday Finance. The market value of almost $1 trillion, Bitcoin was at a tipping point in mid-2024. It had risen more than 55% year too far, outperformed all other major asset classes, but it still only held a small portion of the world's wealth. Though there was still a lack of faith, institutional funds were gradually coming back. At that point, Michael Saylor entered the stage at Bitcoin Prague and revealed a shocking prediction. A $13 million Bitcoin objective, based on a 21-year growth trajectory of 29% annually, with Bitcoin's share of world assets at just 7%. It seemed unrealistic at the moment. However, by 2025, that vision is already beginning to become form. Since then, Bitcoin has increased by more than 60%, taking the lead not just in the last year but also in the last 10 years. Rising tariffs, growing mistrust of fiat currencies, and geopolitical unpredictability are all exerting pressure on confidence in conventional assets, including bonds, real estate, and even big tech. Bitcoin, meanwhile, is no longer considered a fringe asset. Real price goals are being assigned by Wall Street. It is being strategically embraced by U.S. policymakers. Additionally, a current American government has announced its intention to spearhead the global adoption of Bitcoin for the first time. Saylor returns at Bitcoin Prague 2025, but this time with evidence rather than a forecast. He explains the macro trends that are fueling Bitcoin's rapid uptake, the inflow of institutional money, and how we're about to enter a new era in which whole nations are vying for Bitcoin, not just businesses. This isn't just conjecture anymore. This is a revolution in money. As we explore his most recent observations on how Bitcoin is developing, from a trillion-dollar invention to the cornerstone of a new international financial system, stay tuned.
Bitcoin is digital capital. So it's the transformation of financial and physical capital to digital capital. And that's not complicated. That's a very simple idea if you just say it like that. But the implication is it's also driving the digital transformation of the capital markets. So the capital markets are fragmented, right? The bond market trades in Japan at different times than the bonds trading in Germany, and then the bonds trading in Brazil, then the bonds trading in the US. And the equity market, right? Our existing capital markets are built around equity and debt, and there's some derivatives, right? Equity, debt, and derivatives, and they trade 9:30 to 4 Monday through Friday, and they don't trade on the weekends, and they don't trade on holidays, and they're all fragmented, and they're limited in access. So the implication of somebody being able to trade in a capital market in Australia on Saturday and having an impact someone in the United States, 12 hours off on the time zone or something. That's interesting. So a real-time 24/7 global capital market is interesting. Up until now, it has been, again, it was 0.01% of the money in the world. When it was 6,000 or 7,000 a coin, and now it's 0.1% of the money in the world. And so it is a global digital capital market, but it's still de minimis in amount of capital. And so I think that as you see bigger players come into the marketplace and it gets to be 1% of the capital of the world, Now you're going to have the tension of the 20th century. The 20th century capital markets, they're fragile. They're limited to a certain set of people. There are very limited settlement options. They're slow. They're not smart. You can't trade Apple stock 100,000 times on a Saturday afternoon, right? So you can't vibrate it at a high frequency. You don't have global. You can't self-custody. You can't program it, right? So the capital that's in the traditional markets, it's not programmable. It's slow. It's fragile. And the capital in the 21st century, it's going to be smarter, faster, stronger. And so the interesting opportunity is what happens when the investment bankers and the commercial bankers and the money managers realize that digital capital is smarter, faster, stronger, universal, right? Because it has a lot of implications, right? Like there's 50,000 publicly traded companies. And how many of them are capitalized on Bitcoin? How many of them are capitalized on bonds? So 99.99% of the corporate capital is financial capital, which is fragile, fragmented, right? And defective, right? Digital capital is appreciating at 45% a year. And over the last 4 years, and financial capital is depreciating at 4% a year. In fiat, this is in USD terms, right? But I think that has profound impact on investment banking, right? Like, why wouldn't you go and recapitalize every company? So that's interesting. I think what's also interesting is it's like the same. The financial world brags about taking settlement from T plus 5 days. Like in 1970 to 75, it was like T plus 5 days, T plus 5 to 10 days, then T plus 3 days. And it was T plus 2 days as of a year ago. And now we're getting to T plus 1 day. But we're not T plus 1 day. On Friday, it might be from Friday at 4 till Monday at 10 a.m. or something to settle something. So money still moves very slowly, and it has to pass this fragile network of correspondent banks that anybody can block. Are there risks in building Manhattan into a great city in North America? There's steps that have to be, if I find you the greatest port in North America, an island of granite sitting between the East River, the Hudson River, with the great natural harbor, right, in the right location, and everybody's decided it's their favorite city, and the year is 1650. Are there risks with growing the city? I suppose, but I don't think of it that way, right? I just think there's challenges to be overcome and opportunities, right? And so I think Bitcoin's going through all that, right? There's stuff to be built, right? If the accounting changes for every company in the world in February or January of 2025, then I guess that means the accounting profession has to learn a bunch of new things. There's new stuff to be done, right? New procedures and accounting systems to be, reviewed. And likewise, it's one thing to say banks should custody Bitcoin. It's another thing to create, are 10,000 banks going to create their own Bitcoin custody service? Well, is that a risk or is that an opportunity? I guess I'm back to 1900 and I'm in New York, and we just invented electricity. And I'm just pointing out that I think like one day all buildings will be wired with electricity. And you're asking me, are there risks in the wiring of New York City with electricity? And I guess there's going to be some electric fires, right? And there's also going to be a lot of fire insurance to get sold. And there's also going to be electricians, and there's going to be electricians union, and there's going to be a lot of projects, and there's probably going to be a bond, and somebody's going to complain about it. We're going to dig a lot of trenches, right? Because where are those power lines running? And someone's probably going to put a drill, jackhammer through one of the power lines, and stuff's going to happen. And then we're going to fight over whether we burn coal or we run the power line to Niagara Falls. And there's going to be stuff, but I just think there's just a lot of work to be done. We're building out the future. Bitcoin is the risk-free return for a Bitcoin maximalist. So just start there, right? Bitcoin is the risk-free return. And the question is, do you want to take risk or not?
Saylor isn't talking about hype. He's talking about a business change. It has been less than a year since Bitcoin was on the edges of global banking. We now see it at the heart. Big names like BlackRock and Fidelity have put more than $200 billion into Bitcoin ETFs. Now, nation-states are quietly adding BTC to their savings. They're not doing this to speculate, but as a way to plan for a world economy that is falling apart. Wall Street isn't asking if Bitcoin should be in portfolios anymore. They're deciding how much to put in, and 3 to 5% is now seen as the starting point. Bitcoin is becoming an important part of the banking system, similar to how the internet did in its early years. Regulations are becoming more clear. Government support is rising, and institutions have a reason to join in rather than ignore. Bitcoin is no longer a weird investment. It's a threat to world peace, and the adoption race isn't going to begin. It has already begun.
But if we start with my base case is the risk-free return is 29% ARR for 21 years, which means that when you pitch me an idea, if you come to me and say, hey, I got a new Bitcoin custody thing, or I got a new hardware wallet, or I got, a new Bitcoin whatever banking thing, or I got a new whatever. I'm like, well, so can you guarantee me 29% plus the risk premium, which is probably 8%, 6, 8, 10%. It's like the risk premium on a mega corporation like Disney or whatever is 4 or 5%, and the risk premium on a small startup has got to be 20%. Okay, and so if you pitched me an idea and said, okay, I guarantee you 40% ARR for the next 21 years, and I'm like, and is it going to be capital free? Like I don't have to bother with it, and I don't have to put any more money in later. You're like, well, if you promised me all that stuff, I would like, okay, well, let me think about it. But probably if you gave me 10 of those ideas, I probably still don't want them because it's just a distraction. Because my view is 29% ARR risk free. And then I guess I would say, when you look at it like that and you compare it to the next 50,000 publicly traded company ideas and the next 500 million private ideas, it's like they're all kind of distractions with the exception of this, which is the only thing that's better than Bitcoin is more Bitcoin. Okay, so what is my personal idea? My personal view is like my personal holding strategy is I own Bitcoin. I'll either hold the asset, 17,732 Bitcoin, which I tweeted, 4 years ago, which I'm still holding, or I would hold like the ETF if I needed to, to buy, if I had extra cash flow yesterday and I just wanted to have it. And I thought, well, I don't know if I can hold it for a decade. I might need to spend it in 2 years to pay some expenses, but I'm going to hold it for now. So if I'm trading in high frequency in and out or whatever, it's like, I would buy an ETF of Bitcoin, and I would take the counterparty risk to BlackRock or Fidelity or something. But would I put my Bitcoin with Celsius, or BlockFi or FTX or Genesis? They all pitched me, by the way. I already said no to every one of them. No. But why? Because the counterparty risk to an unregulated entrepreneurial custodian is like 25% a year. Like they're going to fail every 3 years, right? So just rationally thinking, and I just don't need the headache. So if you offered me 40%, well, I mean, think about this, right? If you thought you've got 25% counterparty risk and your risk-free rate is 29% over 21 years, you're already up to the point where they have to offer you 55% interest to put your money in their custodian, right? So did any of them offer me 55% interest? No. And by the way, if they did, then my next question is, well, how are you going to generate 55% interest? Well, we're going to put it in a DeFi levered protocol on what? I'm like, okay, well, no. Now I've got towers of counterparty risk. that's like 7 layers of risk. And eventually there's a degenerate trader, offshore in a dark pool that's levered up 20 to 1 that's paying that. So none of those things are very compelling. So I would say those don't make any sense. But, on the other hand, like if JP Morgan offered me 5% interest on my Bitcoin and they pledged their balance sheet, too big to fail. If they said JP Morgan won't back it, if they said we'll take your Bitcoin, we'll loan it to someone who wants to short it, and if they short it, then you're out. I wouldn't take them as a broker, but if I was facing them as the counterparty, I'm like, I think that the U.S. government will have to fail before J.P. Morgan fails. And so, if it's one of those top 4 too big to fail banks and they offer me SOFR, and SOFR was 550 basis points, then would I take that yield? Probably. Yeah, maybe. Right? I mean, don't.
In addition to being hopeful, Michael Saylor's most recent lecture offers a blueprint for how the global capital markets are shifting their focus to Bitcoin as a new monetary standard. Bitcoin has accelerated its institutional, regulatory, and political momentum in the last 12 months compared to the preceding 12 years. ETFs are operational, significant pro-Bitcoin legislation is moving through Congress, and U.S. authorities are approving institutions to store Bitcoin. In 2025, what seemed like theory in 2024 is turning into reality. From Asia to South America, sovereigns are starting to see Bitcoin as vital, reserve-grade infrastructure that offers a way out of reliance on the dollar and a route to digital sovereignty, rather than as speculative. Additionally, the markets have noticed Bitcoin has outperformed tech companies, real estate, and even gold, rising more than 60% so far this year, an average 56% yearly over the previous 5 years. Importantly, corporate treasuries seeking to preserve shareholder value now find that Bitcoin is not only feasible, but also essential, since it surpasses the worldwide cost of capital, approximately 13%. For this reason, businesses like MicroStrategy and MetaPlanet are using Bitcoin treasury techniques in large quantities. This is the beginning of a capital rotation, not the periphery. According to Saylor, it is indisputable that Bitcoin has become a benchmark, a base layer, a monetary standard, when 99.8% of the world's money is locked up in underperforming assets. These days, many welcome rather than fear its decentralization and impartiality. The process of repricing the global system, Bitcoin is at the forefront. Now, the only issue is, are you in a system that is losing time, yield, and trust, or are you prepared for what comes next?